Right. So, thank you very much, everybody, for turning up for the our last talk by Eco Sustainability. Today, we're going to be talking about ESG and sustainability reporting landscape in Southeast Asia. Although the title here says Southeast Asia, but globally, we're all pretty much on the same direction at different speed, but at the same direction. So there'll be a lot of things that you can learn from EU and Southeast Asia as well. Next slide. All right. So a bit of information about our company. Eco Sustainability is a consultancy firm headquartered in Singapore, and we have presence in a couple of countries like Cambodia, Malaysia, Thailand, and the Philippines, as well as projects all over the world. And our bread and butter services are sustainability reporting, consulting, carbon credit projects and training. This is one of them, and also policy services. Next. Okay. So we specialize in a couple of standards, 17 of them, in fact. But here are some of the more commonly known standards. You might have heard of 14064 on greenhouse gas carbon reporting, 14068 on carbon neutrality, and 14067 on product carbon footprint. Next. All right, and I'm very proud of this slide. There are standard setters globally, such as the ISSB, Vera, Greenhouse Gas Protocol, ISSB. Uh, but there are people, and then there are users of the standard, such as people who prepare the report, people who audit the report, and then there are like people in between, basically they are standards contributors. That's us. So we contributed to the ISSB, to Vera, SASB. Missing on this slide is the SBTI, the standard for for net zero, and of course, greenhouse gas protocol. So you're learning not just from any standards users, but standards contributors as well. So a bit of house rules. Uh, as you notice, this will be recorded. Please keep your microphone on mute throughout the talk and until the Q&A at the end. But if you have questions during the chat, I will be responding. And we want to make sure this is a safe space, so make sure feel free to ask any question at all. Sustainability is very, very new. It's new to you, it's new to us as well. So there's no such thing as a silly question. Your fellow audience will probably be thankful you're asking these questions. All right, without further ado, I'd like to pass the time to our consultant, Maria. Over to you.
Yeah, thank you very much, Keegan. So, just a brief introduction about myself. Again, my name is Maria, and I am based in the Philippines. I'm one of the consultants at Eco Sustainability, and my background is in biodiversity conservation, environmental management, climate change, and sustainability. All right, so this topic, it's this is moving very quickly and it can feel overwhelming. There are different regulations, different timelines, different expectations across different jurisdictions. So our goal today is to cut through the noise and provide you with key information on ESG and sustainability reporting in Southeast Asia. So by the end of this session, you should be able to understand why sustainability reporting and assurance is important, and that the current level of ISSB adoption across Southeast Asian countries. You should be able to learn about the different sustainability reporting requirements, timelines, and regulatory approaches across key countries in this region. You should be able to recognize how global regulations such as the EU CBAM, and I'll talk more about this later, um, affect companies in Southeast Asia. And finally, be able to identify, practical implementations for businesses, what this means for your data systems, governance structures, assurance readiness, and internal processes. Okay, so in this first section, I'll walk you through the current state of sustainability reporting and assurance in this region. What are the key challenges that companies are facing, and how ISSB is designed to address some of these challenges? So, adoption of sustainability reporting across many ASEAN countries is actually quite strong, based on a study done by KPMG. They conducted studies of top 100 companies in each country. And one of the findings is that, adoption of sustainability reporting is between 69% to 100 percent of companies. So they're already publishing sustainability reports. But high adoption does not mean automatically translating into high quality or decision useful disclosure, as you know. While many companies are reporting, only around 2 to 3% actually, on a global scale, provide complete disclosures. So the rest of the 97% actually does not clearly cover governance, strategy, risk management, and metrics in a way that investors can actually use. So, what this highlights is a real gap between having a sustainability report and having meaningful sustainability information for investors and other stakeholders to use. That gap is especially clear when we look at long-term climate risks and transition plans, as well as Scope 3 emissions, which for many companies make up the largest share of their total emissions, but are still rarely disclosed in a robust, rigorous way. Now, let's talk about assurance, because this is really where reporting moves from saying, something to proving it. So think of sustainability reporting as the company telling its stories. These are our missions, these are our risks, this is what we're doing. But assurance, on the other hand, is when an independent third party steps in to check that story. So they assess whether the ESG information is accurate, complete, and prepared in line with the relevant standards. I'm sure most of you are familiar with that, but just in case, I want to make sure everyone understands certain terminologies. So, to understand how ready companies are for assurance, we look at ESG assurance maturity scores by KPMG's Assurance Maturity Index. And this score ranges from 0 to 100. A higher score means good, and a lower score means data is fragmented, processes are weak, and assurance become can become riskier and more costly. So these scores assess things like governance, internal skills, data management systems, and controls across the value chain. And as you can see in the graph in front of you, average maturity scores across all regions are still below 50%. So that tells us something very important. So while many companies are already reporting on sustainability, most are not ready for their data to be independently assured. So this gap between reporting and assurance readiness is exactly why regulators, investors, and audit committees are paying much closer attention to data quality, systems, and control. So not just disclosures on paper. It's also widely recognized that assurance is no longer just about uh, ticking a compliance box. It really delivers real business value. So, according to studies, assurance strengthens credibility and trust, which can help companies attract investors and new clients. It can help access new markets and maintain investor confidence. It also supports better decision making, improves reputation, and enhances shareholder value. And over time, it can help reduce costs and risk. So, assurance is actually gaining so much momentum right now, and that's mainly due to pressure from important stakeholders. So, as you can see in the table, from 2023 to 2025, the pressure for ESG assurance has clearly increased across multiple stakeholders. And the biggest pressure is actually coming from financial markets. So in just 2 years, from the pressure from investors, lenders, and analysts has increased from, mid 30s in 2023 to over 50%. So this signals a major shift. So, sustainability reporting and assurance is now closely linked to finances, to cost of capital, valuation, and investment decisions. And if you notice at the bottom, at the same time, there's also pressure from activists and local communities. It's also rising. And this highlights growing reputational risk and social concerns. But there are right now, there's still a lot of challenges. The biggest challenge in preparing for reporting and assurance are the complexity of reporting requirements and clear evolving regulations, as you can see in the table in front of you. So, companies are still trying to navigate multiple standards at the same time, each with different definitions, metrics, and objectives. And this fragmentation really drives up reporting costs. It reduces comparability and it makes difficult for investors and decision makers to assess performance across companies and across countries as well. So most importantly, this fragmentation also weakens the link between sustainability risks and financial outcomes. And that's why regulators are really now pushing for greater alignment so that sustainability information is consistent, is comparable, and actually decision useful rather than just pages in a report. So this is exactly why the ISSB was created. I'm sure most of you know what ISSP stands for. It was established in 2021 by the Foundation. It's the same foundation or organization behind the Global Financial Reporting Standards. So ISSB is one of the two principal standard setters in global sustainability reporting. The other one is GRI, or the Global Reporting Initiative. So ISSB was created to address specifically the fragmentation in sustainability reporting. So it was developed by building on and consolidating existing frameworks such as the TCFD, CDSB, and SASB. And then in June 2023, ISSB issued its first two sustainable disclosure standards, and there will be more coming. So that's IFRS S1 and IFRS S2. So for IFRS S1, think of this as the foundation or the umbrella framework. So it's the general sustainability disclosure standard that sets the rules of the game. It guides companies on how to identify, assess, and disclose sustainability related risks and opportunities that could impact the financial position, the performance, or the long-term prospects of the company. And then IFRS S2 is more specific, as the name suggests. It's tailored to address climate change disclosures. So it requires companies to disclose greenhouse gas emissions, climate-related risks and opportunities, governance and risk management, and most importantly, how climate risks and transition plans impact the bottom line. So both S1 and S2 really aim to align climate and sustainability information with financial decision making. The main target audience is really the investors and other important stakeholders in the space. So it's using the same discipline, the same structure, and the same accountability that investors expect from financial statements. All right. So since IFRS S1 and S2 were issued in June 2023, it's not a long time ago, we've seen momentum build very, very quickly around the world. So right now, many jurisdictions are now choosing to adopt or align their sustainability reporting requirements with ISSB. And this includes major markets across Europe, North America, Asia Pacific, and the Middle East. Here in our region, countries like Singapore, Malaysia, and the Philippines have already announced clear roadmaps or regulatory plans to adapt or align with IFRS S1 and S2. And others are still earlier in the process. So others are using ISSB as a reference point while they build capacity, develop their guidance, and prepare companies for future assurance requirements. But the direction is very clear, as Keegan said, not just in our region, but globally. We're all going into the same direction. So alignment will for sure happen in the future. Um, okay, so in the next 20 minutes or so, I'd like to go over the regulatory landscape for a couple of countries in this region in Southeast Asia. Bear with me. This can be a lot. Okay, so Singapore. So for Singapore, Singapore is widely seen as one of the regional leaders in ISSB adoption. It mandates sustainability reporting requirements to all listed companies as well as large non-listed companies. And it has taken a phased and practical approach to implementation. So for listed companies, climate disclosures align with IFRS S2 or IFRS S2 will begin, actually already begun in 2025. And at this stage, Scope 1 and Scope 2 emissions are mandatory with Scope 3 expected to follow in 2026, especially for larger issuers. And then for large non-listed companies, mandatory climate reporting starts later in 2027, and Scope 3 disclosures are deferred until at least financial year 2021, 2029. Sorry. So this gives companies additional time to really strengthen their data systems and internal capabilities. And then on assurance, Singapore is also moving very carefully, but with a very clear direction. So limited assurance on Scope 1 and Scope 2 emissions is expected. For listed companies, that will be in 2027. And then for large non-listed companies, it will be in 2029. So the key takeaway here is Singapore isn't just endorsing ISSB in principle as the global baseline for sustainability reporting. It's really putting it into practice. The country is creating a clear and credible pathway toward full ISSB alignment while still giving the companies the time that they need to prepare. So for Malaysia, they're taking a very clear and structured approach as well to ISSB adoption, similar to Singapore. In terms of coverage, the requirements apply to listed companies in the main market and ACE market. I'm not sure if I'm pronouncing that right, as well as large non-listed companies. So implementation is rolled out in three groups, which helps kind of spread the transition over time. So group one, this will include large market issuers, which will start with climate first reporting from 2025, and then we'll move to full ISSB reporting by 2027. Group two, it will cover other main market issuers with first the climate first, starting with the climate first reporting from 2026 and full ISSB alignment by 2028. And then lastly, for group three, this will include ACE market issuers and large non-listed companies, and they will begin climate first reporting in 2027 and full ISSB adoption by 2030. So on assurance, Malaysia is planning to introduce reasonable assurance on Scope 1 and Scope 2 emissions. And it will begin with Group 1 in 2027, with further consultations along the way. So Malaysia is clearly positioning itself as a regional leader as well. along with Singapore, um, with their mandatory and well sequenced or tiered transition from climate first reporting towards full ISSB alignment. Philippines. So Philippines has clearly committed to ISSB adoption through a phased and tiered roadmap. Their requirements cover all publicly listed companies, as well as large non-listed companies and government corporations that's classified as commercial public sector entities. So the implementation begins with tier one for the large listed companies. These are, companies with market capitalization over 50 billion pesos. So sustainability reporting is mandated in 2026. And then tier two, this is for mid-cap listed companies. Reporting will start in 2027. And for tier three, it includes small cap listed companies and large non-listed companies, and they will begin in 2028. But early adoption is permitted and strongly encouraged for companies who want to move in and start doing the report. On assurance, limited assurance is proposed for all covered entities, and it's expected to begin 2 years after the mandatory adoption. So Philippines is really moving away from their usual narrative sustainability reporting, and that's not mandatory towards really like financially material and investor focused climate disclosure that's aligned with ISSB. Indonesia, I'm not sure if we have some folks from Indonesia here, but Indonesia is taking a climate first approach, also gradual, similar to the other countries, with a strong emphasis on market readiness. So um, the scope is expected to cover publicly accountable entities, including listed companies and financial services institutions, although the final coverage is still being finalized by their financial services authority. And the current target effective date will be in 2027. But they also encourage early adoption for companies that are ready to move sooner. So in the initial phase, basically they want to focus on mandatory climate-related disclosures that's aligned with IFRS S2. Companies will be required to disclose material climate-related risks and opportunities, while broader sustainability disclosures beyond climate remain voluntary at the start. So when it comes to assurance, requirements are still under consideration. There's no final decisions yet that's announced publicly, at least. So Indonesia overall is prioritizing climate disclosures first, using local standards to achieve ISSB equivalent outcomes, while still giving companies the time that they need to build systems, improve their data, and strengthen their internal capacity. All right, so for Thailand, Thailand, similar to the other countries, tiered approach as well. They want to start with the climate first approach to adapting ISSB. So it will apply to listed companies on the stock exchange of Thailand, including the initial public offerings, as well as listed funds and trusts, such as the real estate investment trust, infrastructure funds, and property funds. And reporting will be done at the consolidated entity level in line with ISSB. Implementation is spaced over several years. They're very generous in their transition relief, and this is based on current regulatory proposals. So SET 50 companies are expected to begin reporting in 2027, and SET 100 companies in 2028, and the other stock exchange of Thailand listed companies are expected to start in 2030. On assurance, limited assurance on GHG emissions has been proposed, although the final assurance framework is still under development. So Thailand is taking a bit more of a practical approach. They're offering extended transition reliefs while still clearly committing to full alignment with ISSB requirements over time. And then Cambodia, I'm not sure if someone from Cambodia is here, but at the moment, Cambodia does not have mandatory ESG or sustainability reporting aligned with ISSB. Most sustainability reporting is still voluntary. Someone is clapping their hands. They're happy it's not mandatory yet. So yeah, it's still voluntary, and existing rules are spread across different environmental, social, and governance laws rather than having one clear ESG framework. However, Cambodian companies are still affected by global sustainability regulations, especially if they export or are part of the international supply chain. So, for example, under the EU's CBAM, or the Carbon Border Adjustment Mechanism, I'll talk about that later. Companies that's exporting carbon intensive products to the EU may need to report emissions and potentially pay a carbon cost. And then also there is this Corporate Sustainability Reporting Directive, or CSRD, that might affect Cambodian companies as well that operate in the EU or supply EU-based companies. So they may be asked to provide more detailed ESG information. So even though Cambodia isn't yet aligning with ISSB, global market rules are already shaping expectations around this. So uh, yeah, for many Cambodian companies, ESG requirements are coming, not necessarily from local regulations, but from, customers and buyers and market overseas. Vietnam, same with Cambodia. Vietnam does not yet have a mandatory sustainability reporting framework that's aligned with ISSB, but it's clearly moving in that direction. So for now, ESG and sustainability disclosures remain largely voluntary, with requirements mainly applying to listed companies, banks, and large state-linked enterprises. And Vietnam is also taking a climate first approach using ISSB's IFRS S2 as a reference point or reference framework rather than formally adapting it at this stage. So their focus is really on strengthening climate risk disclosure while regulators build guidance, capacity, and market readiness. So even without formal ISSB adoption, Vietnamese companies, same with Cambodia and same with the rest of the countries in the region, are also affected by global sustainability regulations that's through international trade and supply chains. So overall, Vietnam is aligning gradually rather than adopting immediately. Local requirements are still evolving, but the global market expectations are already pushing these countries to improve their climate data and sustainability disclosures. How are we doing? Are we good? That's the last country that I'll be covering. All right, so as companies improve their emissions and climate reporting, something else is happening at the same time. So some countries are already starting to put a price on carbon. So and this is what's going to happen for the rest of the countries and regions. So once emissions are measured consistently, especially for scope 1 and scope 2, those same data sets become the basis for carbon pricing tools. So whether that's carbon taxes, emissions trading schemes, or alignment with external regulations like those coming from the EU. So basically, what will get reported today will increasingly what gets priced tomorrow. And so ISSB actually is not just about improving transparency for investors, but it's also really laying the groundwork for climate policy and preparing companies for a future where carbon is not only disclosed but is becoming like a financially material, entity. So at the moment, as you can see in the table, Singapore is the only ASEAN country with an operational carbon tax in place, making it the clear regional front runner when it comes to putting a price on carbon. And then Indonesia is a bit different. It already has a carbon tax law that's been enacted, but enforcement has been postponed. So for now, the focus is on building readiness and testing approaches through sector-specific pilots rather than, full-on implementation. And then for Malaysia and Thailand, they're widely seen as the next likely movers as well. The big driver here is exposure to external pressures like EU's CBAM, which I'll talk about later, as well as, just overall broader fiscal and climate policy reforms. And then in Vietnam, the policy direction is leaning more towards emission trading systems or ETS instead of carbon tax. And the country has started with pilot programs with plans to gradually expand over time. And then overall, most ASEAN countries are still in the early stages of policy design and or feasibility assessment. So what we're seeing across the region is a very uneven but clearly evolving carbon pricing landscape, but it's going to happen at some point. So it's very important that companies are well prepared for it. All right. Give me a thumbs up or a clap if you're still good. This is a lot of information. I want to make sure people are okay. Okay, great. Thanks. All right. So now I want to cover uh, global regulations that's affecting the region. Specifically, I'll cover CBAM, EUDR, and CSRD, but there are more out there. And I'll keep it very high level because we don't have a lot of time. Just like high level orientation to these things, and some of you probably already know this. So CBAM, or the EU Carbon Border Adjustment Mechanism, it's an EU policy that puts a carbon price on certain goods imported into Europe. So this is based on the emissions generated during the production of goods and products. So the goal is to ensure that any imported products face a similar carbon cost to EU-made goods and to prevent carbon leakage. So CBAM will be fully implemented by 2026, and it will focus on carbon intensive sectors like iron and steel, aluminum, cement, fertilizers, electricity, and hydrogen. For most ASEAN countries, the overall impact is expected to be limited, but there are important exceptions. So in Malaysia, estimates suggest up to 75% of exports to the EU could be affected. In Indonesia, it could be around 20% of exports to the EU that may fall under CBAM. Um, the EU has actually since narrowed the scope through its omnibus package. So it has exempted around 90% of importers, mainly small, medium enterprises. But overall, 99% of heavy emissions industries from iron, steel, aluminum, and cement imports will be covered. The second regulation is the EU Deforestation Regulation, or EUDR. It's an EU law that's designed to ensure that products placed on or exported from the EU market are not linked to deforestation or forest degradation. I love this law. So unlike voluntary sustainability commitments, this is a market access regulation. So if products are not compliant, they simply cannot enter the EU market. So it has been enforced since 2023, with compliance starting in 2024 for large companies And for small and micro enterprises, it started in 2025 in June. So the regulation covers seven high-risk commodities. So the palm oil, cocoa, coffee, rubber, soy, cattle, and wood, and including a wide range of processed and derivative products. For ASEAN countries, the implications are significant. Most countries are in our region are from, export a lot of agricultural products. So countries like Indonesia and Malaysia face high exposure due to their palm and rubber exports, while Vietnam and Thailand are affected through their coffee and wood products. Okay. CSRD is the next one. It's the Corporate Sustainability Reporting Directive. This is EU's main sustainability reporting regulation. And this applies to obviously large companies in the EU and listed SMEs. Um, but it also applies to non-EU companies that do a lot of business in the EU. So reporting is done under the European Sustainability Reporting Standards, or ESRS. And the disclosure includes things like climate transition plans, greenhouse gas emissions across scope 1, 2, and 3, and a double materiality assessment as well, looking at both environmental and social impacts and financial risk. So, and why does this matter? How does this relate to the region? Basically, um, CSRD is really changing what good sustainability data looks like, and those expectations are now flowing through global supply chains well beyond Europe. So, and non-EU companies from our region might get affected, or they might be required to provide high quality ESG information. Okay, so all right, so we're coming to the end of the presentation. So I'd like to bring everything together by focusing on three things. What are the overall implications? What's the outlook? And what readiness really look like for companies? So, implications. So I keep repeating this. Sustainability and climate reporting are no longer just compliance or a CSR exercise. With the adoption of ISSB, the emergence of carbon pricing and regulations around the world, like the EU-driven regulations, the CBAM, CSRD, and EUDR, climate data and sustainability data is now considered, financially material. Emissions, climate risks, and supply chain impacts increasingly affect access to capital, cost of financing, market access, and overall competitiveness of companies. What's the outlook? What's ahead of us? So the direction is really clear. The timelines of implementation from country to country might differ, but as Keegan emphasized in the beginning of this talk, the trajectory is the same across countries and across jurisdictions. There will be more mandatory disclosure, more assurance, and closer integration between climate and financial reporting. So, what is optional today, particularly around Scope 3 emissions, transition plans, and value chain data, it will become mandatory over the next few years. So finally, readiness. So the companies that are best positioned right now are not waiting for final rules to be issued. They're probably already building reliable emissions data, strengthening their governance systems, aligning finance and sustainability teams, and are already starting to map supply chain risks. And there are four practical areas to prioritize. Versus governance and ownership. Companies really need clear board and senior management oversight on this. There needs to be well-defined roles across finance, sustainability, risk, and operations, and decision-making structures that connect climate issues to business strategy. Second is data readiness. So this means really moving beyond, ad hoc sustainability data and building reliable, auditable greenhouse gas inventory, starting with scope one and scope two, and gradually expanding to scope three. So there needs to be clear methodologies, consistent boundaries, and documented assumptions and internal controls, because what gets reported today will be assured or regulated tomorrow, as I keep saying. So the third is financial integration. ISSB is fundamentally about linking sustainability to financial outcomes. That means stress testing climate risk, understanding how physical and transition risks affect cash flows, asset values, insurance, the cost of capital, and really embedding those insights into financial planning and disclosures. And the fourth is assurance. So over time, companies will really need systems, processes, and documentation that can stand to independent assurance. So this means aligning sustainability and financial reporting timelines, so that the two move in parallel, rather than in silos. And finally, it's very important to remember that that not everything needs to be done at all at once. Companies can really start with what's most material, focus on climate first, and then pilot some disclosures, learn from early adoption, and build internal capability over time rather than waiting for deadlines and scrambling to catch up later on. So those companies that will really adapt and start preparing now will benefit later. Okay, so that's actually the end of my talk. I will now open the floor for Q&A for questions that you may have. I'm not sure if someone asked questions in the chat, but yeah, this will be the time to discuss those.
Yes, Marias. Somebody did ask a question. Dr. Esther from Malaysia asked, what practical approaches can logistic providers use to ensure ESG data credibility when much of the data sits with drivers, fleet partners, and vendors? So maybe I can take this one. So just give a bit of context of what the question means. Most companies need to request data from third party. So you need to report your scope one and scope two, but for your scope three, your supply chain, you need to actually request the data from your supply chain. And so, how do you ensure there is data credibility and integrity? I would say number one would be, is it audited? So that's why assurance. In this industry, we use the word assurance, but it essentially means audit. Uh, an audited report always carries much more weight. That's one. Two, another way companies can do that is to get a third party platform to and ask your supply chain to use that platform. For example, there is CDP, which is I'd say probably the most trustable standard in the world. There are third party softwares like EcoVadis, um, and other third party platforms. They would have gone through a very vigorous process, questionnaire, asking for data. But not all are verified, so you still have to do your own assurance. Yeah, any other questions? No questions? So I have a question. How many of you started your sustainability reporting journey? How many of you are reporting it for the first year, or maybe you're preparing to report in the next year? Could you type in the comment section? So how many of you are starting your sustainability reporting journey? How many of you are reporting, starting your first report next year? We have yet to start. Jeannie Lab says, my first year. Dr. Esther says we have yet to start. Yeah, that's great. So, as you can see from Maria's presentation, this is a global trend that cannot be denied. We're all moving in the same direction. Some of us at different speed, but we are all moving at the uh, same direction. So you can actually estimate what's going to happen in your country by just looking at another country that has gone before you. The phases are 99% similar. Okay. If no questions, let's go to the next slide. Okay, so as you know, sustainability reporting is a huge topic. It's very complex. It can be very overwhelming. We totally understand, and that's why we are having a one-day training next year on the 31st of oh sorry, on the 31st of January. It's a Monday. Is it a Monday? I think there's a typo here. I'm so sorry. It's actually a Saturday. It's 9 a.m. to 5 p.m. Singapore time, and you will learn the theory on sustainability reporting. We'll focus on ISSB, and also we'll cover carbon accounting based on ISO 14064. We'll do some simulations. We'll have some fun. We'll do a bit of lecture and also a bit of hands-on workshop as well. And you'll also be in a very special community group. It's a WhatsApp group where you can get the latest information on sustainability reporting and all things ESG. Basically, we'd like to transfer as much knowledge as we can to you. So let's. Okay, so the training is actually 250 Singapore dollar. But if you register by 17 December, which is in 2 days' time, you get it for 200 Sing dollar. We want to make sure it's completely affordable, and we want to make sure that nobody does not come for this because it's the price is prohibitive. And for the next 24 hours, we have a buy one get one free for 250 Sing dollars. So if you can take your handphone and scan this code, I'll give you 10 seconds to do it. Okay, five, four, three, two, one. Okay, time's up. So do register within the next 24 hours. We'll send you an email with the payment details. Uh, this is a really, really good deal, and we hope that everybody can make it because we have so much to learn. Okay, next slide. Now, today is the fourth talk in a series of 8 talks called the Sustainability Talks series, unpacking sustainability reporting across Southeast Asia. So if you see the first, Maria, could we go to the previous slide? The previous one. Yeah, that's right. So we finished Sustainability Reporting 101. We finished Carbon Accounting 101. And last week we spoke about the sustainability, the mandatory reporting in the Philippines. So most of you know that the Philippines is mandating reporting in 2026. So we had a special uh, session for that. And today we talk about the ESG regulation. We're going to take a break. And next year, on the 12th of January, we are going to talk about sustainability as a driver of business advantage. Now, this is a really, really important session that will sort of address many misconceptions that people have. People always think reporting is about altruism, it's about doing good to the planet, which it is. Of course, it is. We want to save the earth. We want to tackle climate change, global warming, of course. But the ISSB is the one standard that emphasizes on sustainability related financial impact, meaning we see financial impact from the lens of sustainability. So if your company adopts sustainability, what is the financial impact? How do you increase revenue? How do you decrease costs? How do you find new markets? So, our colleague Geraldine will be talking about that. And on the 26th, we will have Sustainability Reporting 101. For those who have missed the first one, this is your second chance. And let's go. And of course, we have the 31st January. And then the 13th March. So we have two trainings. They're the same training. So if you can't come on the 31st, you come on the 13th of January. And in February, and we will cover two very important topics: introduction to carbon accounting, and again, an updated version of today's talk on the 23rd of February. Okay, next. All right, thank you very much. We'll have 30 seconds for any last